Hey, what's up, guys? I'm going to be making a weekly forecast video, weekly outlook video. Okay, so to start off, here is ES on the daily chart. And if you remember when I made that quarterly shift video, and it was right here, I think it was like the 2nd of November, and I talked about how we were going to go for that buy side. Well, that panned out, which is awesome to see. And now the next question is where do we go from here? So we took buy side liquidity. And you could be thinking, is this a market structure shift, which would mean we would continue going higher, or is this a sweep of liquidity for lower prices? I am going with the idea that this is going to be a market structure shift. And I don't really think it's a market structure shift, but it's a quarterly shift. It's quarterly shift in direction. So as you can see, our last quarterly shift was bearish. The one before that was bullish, and then the one before that was kind of neutral. We had this V. I'm expecting more buy side. So I suggest you go watch those quarterly shift videos I made. I'll put a link somewhere if I know how to do YouTube right. I'll put a link. And I talked about how, this is our high in the next 20 days looking backwards. So expect it to be taken in the next 20 days looking forward. So in 40 days, we have this high. So 40 days forward, we can expect in 40 days. It doesn't have to be like tit for tat, like we could take this within the next, before this 20-day period ends. But within this time period, we have to allow this much time for that to be taken. So we could kind of come up, we can retrace, we can go range bound. So if the scenario does happen where we pass this 20-day marker and we're like in this time zone, but we haven't broken lower, just know that, we could still have this in play. But I want to show you something on the continuous contract month. And this is why it can be sometimes important to check this out. So if you go on the weekly of the continuous contract, I wish I could translate over the quarterly shift lines, but from the December S&P contract. But you can't see this data on that December contract, so that's why we're looking at this. Look at these equal highs. So I don't know. I don't want to get too much into kind of fundamentals, but technically, I don't know if you're somebody who kind of listens to more Wall Street podcasts. I do that out of interest. We've technically been in a bull market. So a lot of Wall Street people have been claiming that off of this bottom, the S&P and the NASDAQ are up 20% and we're in a bull market technically. And it's like, okay, yeah. If you're measuring highs to lows and you have to draw a line somewhere and it happens to be 20%, we are in a bull market. But what I want to draw your attention to, so to bring it back to more technicals, when this was this crazy run throughout COVID, this was the past 2 years where the Fed started hiking rates. And this was the downtrend. We shifted market structure again. So whether you look at the continuous chart or even if you look at the contracts, some of these highs and lows might be slightly different. So you'll notice this swing low right here on the continuous chart didn't come as low. If you look on the December contract, when we were talking about meeting that quarterly shift objective to the downside, and we had the market maker sell model with the buy side delivering the sell side, and then it swept. This was the original accumulation. So if you look at the December contract, this low is a little lower, but I just want to draw your attention to these equal highs. I think we're going to go for these equal highs. Note the seasonal tendency of the indices for this time of the year is bullish. And I'm sure some of you have heard of the Santa Claus rally. Stocks tend to rally into the end of the year. I think these equal highs could be targeted. And these equal highs, if we go back to the December contract, and eventually mid-December, we will have to roll over into the March contract. But those equal highs are these highs. So they're not perfectly equal on this contract, but the 60-day high. So I go back and look at the daily. I do think that this 40-day high could be in play. If you're also somebody who kind of follows the more Wall Street traditional market analysis, a lot of like big funds like Goldman Sachs and places like that have their end of the year projections. It's pretty often for them they usually give end of the year projections. And a lot of them are coming out with end of the year projections of the S&P at like 4,600. And I think it's interesting. So remember, I don't want you to not to get too much into fundamentals, but this in Smart Money Concepts, we base things off of liquidity. And what I think was interesting was I saw some data coming out that's saying large funds were the most short at the bottom of this swing low. They were positioned for shorts the most. So it makes sense if if this algorithm is targeting fund size liquidity, we would now start a buy program on this lower time frame, coming off of this downtrend. So what I think is probably going to happen is I think we'll continue off of this buy side and we will attack these highs. I think that'll line up nicely with what these large funds have planned for their end of the year. And what will happen is, since it takes a long time for these things to, change positioning, once they get comfortable, which is probably around now, they'll start positioning themselves long. We'll come take some high and then reverse on them. And that is how the market delivery algorithm will kind of use them as liquidity and then turn on them. So that's kind of the narrative I have going for this long-term daily perspective. What I'm going to give you right now is a real short, quick, and sweet projection of this week. What I think is going to happen this week, short and sweet, is I want to see us retrace and use this down close candle as an order block. Whether that means tapping into the high of the wick, we could even come down to the consequent encroachment or the body. So I'll be looking for that. Now let's look at NASDAQ. What I think NASDAQ is going to do is, as you can see, this fair value gap right here, this SIBI, this didn't exist on ES. So I think ES is going to use the down close candle that happened on Thursday. But I think what I'll be looking for is NASDAQ to use this as an inversion. As you can see, we came up and closed pretty high above it. So I think a retracement somewhere into this fair value gap will be the equivalent of ES retracing to the tops of this candle. As you can see, we have a SIBI right here, but it doesn't line up perfectly with the NASDAQ SIBI. Because the NASDAQ, this is the NASDAQ one. Anyway, it doesn't line up perfectly. So that's the short and sweet version. I'm going to go into something a little more in depth for people who are interested in that. So to do that, we are going to compare the dollar index and the bond prices. So I will link to the ICT video that also talks about these intermarket analyses. I believe it's Core Content Month 5 episode, like video 6, 7, or 8. And we're talking about, if you notice, we've been talking about Core Content Month 5 a lot, and we're doing that because we just had the quarterly shift, and we have to now frame a new perspective of the market because we are just coming off of that old quarterly shift. So we have to make new quarterly shift objectives and directions. And that's why we're talking about month 5 of the core content so much. And in that month 5, it's episode like 5, 6, or 7. ICT breaks down the comparing the futures contracts of the dollar and the bond prices, not bond yields, bond prices. And how this should work is they should be inverse. And he says we can usually identify periods of consolidation or periods of expansion by how the bonds and the dollars are behaving. Because if the bonds and the dollars are moving in the same direction or like in consolidation, then we might experience some stagnation. But if they are trending, then we will see the indices move. Anyways, I'll let you guys go watch those videos. They're not too long. They're like 20 minutes. But what I'm noticing is if we look at the dollar index, this box frames this dealing consolidation we've been in. So this is the high, this is the low, and we've been in this range. This is that range on the bond, the 10-year bond price. You can see consolidation in this range. And last week, when we broke out of it aggressively to the downside, you can see we made a high in the bonds. So when I was first looking at this, I do think it's important when you are, when you're looking at the market to kind of get ready for the week, stare at it for a while. Because I looked at this and part of me was looking at it and my immediate thing was, oh, like we broke lower. But I kind of think this is a liquidity sweep because if you notice, the bonds never closed the body above that high. It just wicked a candle above it. And then the dollar rallied so aggressively off of this swing low. I'm wondering, this is what I initially thought when I looked at this. Because this was just a wick and not a body close, and because the dollar, which is supposed to be inverse, rallied so hard off of that swing low, I thought this was kind of a Judas swing on the dollar, and this was a liquidity sweep on the bonds to go lower. But, I looked at it a little longer, and I was staring at it, and I started marking it up a little more. And then I wanted to also wait for the opening of Sunday. So that's why I'm doing this video so late. But I changed my opinion. I think the dollar is going lower. And, I just stared at it a little longer. And that's why it's important to just stare. I think this retracement, I think we're coming up. And I'm expecting these two candles to be used as an order block. Now, I think we could come up and see a retracement into this daily fair value gap, but I am expecting lower prices now. If you notice, we have a fair value gap and a volume imbalance, and we have that, on the inverse on the bonds. Again, they don't have to move perfectly in lockstep. It's not 5 handles here is 5 handles here. You're just kind of gauging the overall direction. And I think right now is a good example of why, ICT says on certain weeks, don't trade on Monday. And what weeks those are any week where there's like FOMC, a rate announcement, non-farm payroll. He says you should trade on Monday because you don't want to be trading in the latter half of the week. But on weeks when there isn't big news in the latter half, you don't trade on Mondays. And that's usually, you can, but he's just kind of speaking to newer traders because how this candle prints, you can see it starting, how this candle prints will be very indicative to the rest of the week. So if you can get one more day of data, it can really help you in the direction. So I'm expecting this to expand downwards into next week. And this support, as you can see, the body opened up, respecting consequent encroachment. I'm expecting this to go higher. And I think what is hopefully going to happen is we are going to, so this box was the liquidity and on both, and you can see us break out of it. And I think we're just going to retrace to it to then for one move to finally leave it. And that'll be nice because once we leave this consolidation, we will see trending, more trending in other asset classes, in our case, the indices. So that's a little more in depth into why I think. So again, to bring it all full circle, if the dollar uses these PD arrays to send price lower, we can then expect higher prices on the indices, lower dollar, higher indices. I am very interested to see how this candle prints. Again, I think, if we open Monday and just like move away, like high above this buy side, the more aggressively we move higher above this buy side, the more likely I think these highs will get tagged. But just understand, we just took a large pool of institutional higher time frame liquidity. So, we could just digest that a little bit. I got myself all mixed up. This was what I was trying to go back to. Yeah. So again, that's what I'm looking for NASDAQ and ES. I am bullish this week. I will be looking for the low of the week to be formed either around this fair value gap as an inversion or around this order block. And then I will be looking for buy side expansion. And that is both on ES and NASDAQ. And yeah, so those are our narratives. Going into the week, what we'll be doing is we'll be looking at the hourly time frame to kind of, pick out turning points on where that low could be, where that swing low is forming. And then once we can confirm that swing low is forming there, we'll look for a market structure shift on the lower time frames and entries to target buy side. I think, I'll just leave it at that. Cool. Hope this was helpful for you guys, and I will be on tomorrow morning.